Good morning, everyone. Welcome to Windsor Brokers Live Daily Market Outlook. Today it's Wednesday, 26th of September 2012. A negative sentiment that has been established recently continues to put the pressure on the markets, especially on the single currency that continues its down move of its recent peak at 131.70, now threatening to more than the recent 2 months rally from 125, from 120.42, the end of July's low, as some important levels have been lost, and the latest move below 129, where the single currency studied now during the overnight session, sees more potential towards the downside. Also, sterling is in a way losing ground after being well supported and looking for tests of levels above 163. We mentioned yesterday that quite exhausted studies on the daily chart were signaling some more significant reaction to the downside, and basically this overnight slight break below the base at 160, that was the key support, is now seeing a more realistic potential for a possible major correction of the pair, as it remains in the strong uptrend with the 163, the swing top of end of April, being briefly dented. Dollar yen remains in the corrective mode during the Asian session, steadies around 77.70 following break below 78 base, while Swiss franc is attacking important and strong barrier at 94 area. Of course, more of this we'll see in our technical part. Just to mention that crude oil came under pressure again on the fears of further weakening of the world economies, especially Europe, and basically this is now the top story. As this in Spain, the protesters are battling police over austerity plan, and this is basically the thing that now shakes the Eurozone, as protesters clashed with the police in Spain yesterday, as the government prepared a new round of very unpopular in Spain austerity measures for 2013 year budget that to be announced tomorrow, with thousands gathering in the center of Spanish capital, just a few meters from El Prado Museum in central Madrid, where they formed a human chain around Parliament, surrounded by barricades, police trucks, and more than 1,500 police. There was a quite big clash with the rubber bullets and beating protesters. First, as protesters were trying to tear down the barriers, and later to clear the square. At least 22 people had been arrested, and another 32 injured, including the police officers, as lawmakers started to leave the parliament shortly after the 21 o'clock GMT. A few hundred people were still demonstrating in front of the building, but most of them moved away after the officials left. The protest is basically mainly the social, based on the social problems, as comments were from protesters saying that their salaries dropped by 8,000 euros on the annual basis, and it falls much further that people will be able to make ends meet. Basically, the problem is similar to Greece. Actually, it's duplicated now as the crisis moves, and despite Spanish authorities saying that they are not going to rush in this, but definitely they need the help of about 60 billion euros in order to stabilize the sharply weakening economy. With this year budget deficit target looking unbeatable, the Conservative government is now looking at such things as cuts in inflation-linked pensions, taxes on stock transactions, taxes on green taxes, so-called on emissions, or eliminating a tax break. And this is quite unpopular among the people. As said, a very similar situation to Greece, that is further weakening already a well-shaken European Union and Eurozone as a main economy, with the not still not seen any positive signals of coming out of the crisis. As we followed during the development of the crisis, we have seen that first was quite mild in Ireland and Portugal, and then moved to the drastical by drastical way in the Greece and now Spain, and of course Italy should be coming next. And as I mentioned in our one of our previous sessions, Cyprus is quite likely to join the club and have the big impact on the current crisis, according to the comments of world analysts. As said, euro remains under pressure with not much from today's calendar, except the German CPI that is going to be released by regions during the day. That would be all important from Eurozone ahead of Americans' new home sales for August. Unfortunately, we don't have any figure. I'm going to try to find something. Okay. German CPI, the new home sales for August are expected to move up by to 0.38 million, 380,000 compared to 372,000 in the month of July, while the new home sales change on a monthly basis is expected to go up by 2.2%, quite disappointing consensus compared to 3.6 increase in the period of June-July. And except the weekly crude oil inventories that are due at 14:30 GMT, the new home sales are due at 1400. The weekly crude oil inventories are due at 14:30, and the 1.4 million barrels build on the U.S. crude stocks is forecasted for today, and this is the third again in a row compared to surprising last week's build of 8.5 million barrels. As said, the crude oil came under increased pressure of Europe worries, as well as a situation in Iran, as the conflict is now intensifying between the West and Europe, and Iran denies that the state oil company is linked to the guards, with some other issues now being raised again against Iran, especially tightening the sanctions towards Iran. That also affects the production and the supply of the oil. However, the Saudi Arabia and other producers are so far covering up any gaps in the production and the supply, and keeping the price steady. The more significant is a possible impact of the current crisis, as the crude oil dips below $91 per barrel after hitting lows above 93, close to 94 in last Friday, and yesterday's peak at 93.17 was followed by dip overnight to 90.56. So far, the plans of Madrid to announce new round of unpopular austerity measures are one among the warning signals for the European Union, as well as affecting the oil prices. Of course, the reduced the increase of the crisis would be likely trigger for a decrease in the demand for oil, and this is basically pushing oil price lower, despite recent strong rally of the oil in past couple of months, after hitting fresh lows at $77 in end of June, recovering to the levels of $100 per barrel. Recall the comments from OPEC saying that their ideal level for the oil price per barrel should be around $100 to $120. So far, quite strong pressure on the growing fears of European and worldwide crisis are keeping the oil price still under control and not allowing it to break above 100. From technical points, we're going to take a look in a while and see most of the major currencies and commodities in the short term, see the expectations and the current movements, and see what we see from the technical point of view for today. So we're going to start with the euro as the first one. Sorry, I got a bit confused. As said, the single currency is in the downtrend, better shown on the 4-hour chart, where we have the double top at 31.70 and then a steady decline lower that got slightly congested at 129 zone, followed by brief corrective action up to 129.70. This was our initial resistance, where the prices, the recovery was capped by descending 20 days moving average that now crossed below the 55 days one, putting additional pressure on the pair as it broke below 129, and the steadies overnight below this level 128.55 seen so far, with the negative tone dominating on the lower time frames, seeing bears fully in play now and keeping the downside favored. Our immediate downside target is at 128.35. That marks 50% retracement of the upleg from 125 to 131.70, ahead of 128.35 and then 128.24, where is the 200 days moving average, and the 128.00 is around figure support. Also the larger picture broken bear trend line. This is the trend line of a yearly peak at 134.85 that has been broken and now is currently acting as a good support. So basically we have a quite strong support zone between 128.35 and 128, and the break here could be seen as a good trigger for a further extension lower, for further retracement of the 2 months uptrend from 120.42 to 131.70. Basically this will be seen as a break point for a stronger and more significant corrective action. On the upside, immediate resistance is around 128.86, yesterday's low, and 129.00, with the 129.70 seen capping. For now, this is also the crossover of bearish crossover of the moving averages, and only break above 129.70 in case of any corrective bounces would ease the immediate bear pressure. However, we need to see the gain of minimum 130.00 in order to confirm this psychological level, along with the 130.42, the peak of last Friday break, 130.47 peak of last Friday, above which would turn the focus towards the upside. So far, the near-term action sees downside favored, and the targets are set 128.35, 25, and 128.00 seen in the near term. As set for sterling, also it is losing ground after we can see that the head and shoulders like pattern is forming now on basically it's nearly formed but not confirmed on the 4-hour chart, following a false break above 163.00 barrier that peaked at few ticks above at 163.08, and repeated attempt higher was stuck at 162.66, approximately the previous highs, forming the head and shoulders pattern with the neckline at key near-term support at 161.62, now coming under pressure. This level has already been cracked by a dip to 161.48, and as the price moves below the moving average, especially the 55 days one that is now moving sideways and slightly turning towards the downside, with the 20 days one already in descending mode, seeing more potential for further corrective action. That was the pair was resisting so far, keeping steady above 161.60 level, as indicators now broke below their midlines, seeing increased risk of further corrective, actually more significant corrective action, as nothing has been seen so far in the steady uptrend from 154.89, 2nd of August high. Just minor correction was seen at the 3rd week of August from 159.11 down to 157.53. The rest was quite a steady line up. So we are looking for a major correction now that needs to be confirmed on the clear break below 161. 60 and basically 161.00 is a round figure support, also Fibonacci support, as the hourly daily studies, pardon, are quite toppish and already started to descend. Coming RSI is coming out of the overbought territory. MACD is now turning lower, and the momentum also along with stochastics are moving lower, seeing a good signal. This is the larger picture, so this is initial signal of possible further reversal. As said, clear break here to open 161. 31st, this is the previous peak of 12th of September, and then 161.00 as 38.2% Fibonacci retracement of the up move from 157.69 to 163.08. Below here we have the trend line support at approximately 160.60, and then 160.40 is the 50% retracement, below which I will be talking about more significant corrective action. The main focus is now at this zone, as it hasn't been taken out clearly. In case of dips being contained so far, at this zone, then we might be talking again about further range trading and consolidation. However, according to the technical indicators, more focus is seen towards the downside, as lower time frame studies are well in the negative territory, with the overextended already hourly seeing potential of some minor corrective action. Immediate resistance is at 161.80, 162.00, 162.08 is the overnight high. Reinforced by descending 10 days exponential moving average, while any stronger recovery needs to regain a minimum 162, 60, 70 zone. These are the peaks of yesterday, in order to regain some strength and prevent the pair from further slide. Otherwise, the break below 61.60 will open 161, and that would be likely near-term scenario. No much action again on dollar yen, as after breaking below 78 base 77.65 seen so far, and the pair is now steady around 77.70, with the brief bounce higher seen yesterday being capped at 77.92, just ahead of 78.00 previous support, now acting as resistance, with moving averages closely maintaining the negative tone. Hourly studies are in negative to neutral mode at this point, while a more bearish picture is still seen on the 4-hour chart, as bearish crossover of moving averages, and the 20 days exponential moving average at close to 78.00, and yesterday's peak is now keeping the immediate acting as immediate resistance and keeping the upside protected. A regain of 78.00 would be seen as easing of bear pressure, but not spectacular action to be seen unless we see regain of levels approximately 78.40 and 78.50 zone. That will be signal for some a stronger recovery, but still nothing significant to expect unless we regain 79.00 and the 79.21 cluster of resistances at this zone. Ichimoku cloud, Senkou span A, the top of the cloud, as well as 200 days moving average, and as long as these levels stay intact, more downside pressure is seen, likely as break below the recent low at 77.65 is expected to open next significant support 77.12, and the 77.00 as quite negative tone dominates on the lower time frames and sees downside more favored. Of course, possible action of Bank of Japan remains on the table and could be expected at any time upon their decision. And we have dollar Swiss that is currently attacking very important barrier. As we can see, the 94 zone is the 200 days moving average, and then we have the previous high of 94.16 high of 13th of September. Also between these two there is a 50% retracement at 94.07, retracement of the down leg from 95.77 down to 92.37. Quite a strong resistance zone seen as a trigger basically in case of break to allow for a stronger corrective action of the broader downtrend from 99.70 peak of 24th of July. As the pair has been in the stronger corrective action. This is again correction of the larger uptrend, but let's focus now on these points. We need to see break above 94.07, pardon, 94.00, 94.16 zone in order to confirm the base at 92.37 and allow for a corrective action higher. With the 94.47 seen on a break, this is 61.8% retracement of the latest down leg, and then we have 94.65 and the 94.82 ahead of a strong barrier at 95.00. This is previous range floor. So far the studies are quite supportive on the 4-hour chart, all holding in the upper areas above their midlines in the positive territory, as well as hourly ones, seeing a good potential for further extension higher with some minor corrections seen on approach, as this resistance is quite strong, and I don't think that could be taken out at once. We might see some hesitation around 94.00, but as long as the corrective dips hold, initial support is around 93.66, but important to hold above yesterday's high at 93.26. That will keep the immediate bulls fully in play and look for a retest of 94.00 and possible break higher. That, as mentioned already, will be trigger for some stronger corrective action. On the other side, the loss of 93.26 and the 93.00 is around figure support. Will be focusing downside supports. 92.89 currently is the trend line support, and the 92.83 previous minor double bottom posted on 21st of September 2012 will come in focus in case of a loss of important 93.26 and 93.00 supports. For now, the upside is more favored, but as said, some hesitation and minor corrective action might be seen on attempts through 94 as a quite strong resistance. Usually, a similar situation was on the sterling, where we had several attempts at 163 before it brief break. Okay, the situation is slightly different as the pair did not succeed to break higher, but usually concentrating around the strong supports or resistances sometimes takes time in order to clearly break them. And as said, the crude oil remains in its downtrend, came under renewed pressure following a brief corrective action of previous low at 90.95 that was capped at 93.82, and a fresh weakness and renewed attempt higher just managed to leave a lower top at 93.17 with the break below important 91.05, 90.95. That was attempt for a double bottom that failed, now extending losses so far to 90.56 and keeping the latest down leg of 100.72 high fully in play for possible further corrective action. We're going to take a look on the larger picture as the price lost 200 days moving average and the stronger support at 94 zone, the higher platform. And now break below 91.56 and 38.2% retracement, and 91.00 is previous lows, and the figure support is now looking for the dynamic support at 89.77. We're not far from this. Before this, we have the 90.00 as figure support and 90.77, 90 days moving average as shown on the daily chart, with a quite negative tone seen on the daily chart as all indicators now moved into the negative territory, keeping more potential towards the downside. Near-term price action, the negative tone dominates. Some consolidative action might be seen at this point, as MACD is slightly moving higher momentum also, but both indicators are well in the negative territory, and still seeing any corrective action as a minor. Initial resistance is 93.17, yesterday's high, and 93.82 last Friday's high, a break of which would prevent the price from further sliding, and would just simply ease the current bear pressure, but not basically break above 93.82, and more significant 94.00 is required to provide some near-term relief and allow for stronger corrective action. But at this point, nothing to be expected unless we see the gain of 96.40, where is the 200 days moving average approximately there. We have also the 61.8% retracement of the latest down leg. So anything below these levels, I would say, just seen as the corrective action, as fundamentals and the news that are coming from the Eurozone and the other World Cup, but Eurozone as the number one now are quite disappointing, and putting additional pressure on the oil price in the short term. And finally, gold is still steady, still in the range, trading consolidative mode. Nothing happened from in past, I would say, nearly 2 weeks from 14th of September, as the range is clearly defined by 1750 on the downside and 1786 and 87 on the upside. The near-term action is slightly skewed towards the downside, as more pressure is seen following only one tick above the previous high, while the recent attempt yesterday was capped at 1774. Though still we're talking about clear range trade with the neutral tone seen on the 1 hour chart, no direction at this point, but 4 hour ones are losing traction, as indicators broke below their midlines, and the MACD bearish divergence, as shown on the 4 hour chart, gives us a good signal for possible further descent and the possible correction of the latest quite strong rally and gains from 1646, 31st of August low that peaked at 1786 so far. Any break below 1750 would be seen as a trigger. This is also marking 23.6% retracement. Would be seen as a trigger for a deeper reversal and a corrective action, with the levels to watch on the breakdown: 1747, 1741, 1733, 38.2% Fibonacci retracement, and the trendline support currently at approximately 1725. That would be our targets. Any break below the trend line could be quite risky, as this will possibly trigger extension down towards 1700 psychological support, also 61.8% Fibonacci retracement. That will confirm the temporary top at 1786.90 and keep the upside intact in favor of deeper reversal. And also this will keep our initial targets strong resistance zone at 1790 and 1800. Put it on hold for a while. Also topish daily studies that are quite extended and started to point lower could be one of the signals, yet no clear confirmation of the corrective action, as long as 1750 base holds. So far the price action is moving in the narrowing range, with the downside being for now protected by ascending 55 days exponential moving average on the downside, and that topped by 1765, approximately 20 days exponential moving average on the upside. That was all from me today. If you have any questions regarding the session or any other instrument or anything that you would like to find out, you can submit your questions now. Okay, again, it seems that we have covered all relevant points, and I didn't leave any space for any other question. That makes me happy. If I can satisfy all your needs regarding the analysis and instruments that you are looking for, I would like to thank you all for being with us in our live sessions, and expect to see you again tomorrow morning. We are expecting a quite busy day. Usually Thursday's calendar is quite full and coming close to the end of the week, so we might see some even more action tomorrow. As usual, we are back at our regular time at 7 o'clock GMT, 10 o'clock local Cyprus time. Until then, nice day, and of course very good, successful and profitable trading. Good luck.